with veteran investors like Ray Dalio, Robert Kiyosaki, and Jeremy Grantham talking about the possibility of an economic recession and a major crash in the economy. Everyone is really worried about their money, and for good reasons. Inflation has reached a 40-year high, interest rates are rising, and gas prices have risen to a startling $5 per gallon. Welcome to our channel. In today's video, we will talk about the recession and we'll show you how to survive an economic recession. Before we dive deep into surviving an economic recession, let's first understand what a recession actually is. A recession, defined as 2 consecutive quarters of negative economic growth, can be caused by economic shocks, such as an increase in oil prices, financial panics, such as the one that preceded the Great Recession, rapid changes in economic expectations, or a combination of the three. We have curated 5 ways that will help you to survive a recession. Number 5. Maintain an emergency fund. If you have plenty of cash stashed away in a high-interest, FDIC-insured account, not only will your money retain its full value during market turmoil, but it will also be extremely liquid, allowing you easy access to funds if you lose your job or are forced to take a pay cut. Furthermore, if you have your own money, you will be less reliant on borrowing to cover unexpected expenses or job loss. When a recession hits, credit availability tends to dry up quickly. When these things happen, use your emergency fund to cover necessary expenses, but keep your budget tight on discretionary spending in order to make that emergency fund last as long as possible and restore it as soon as possible. Number 4. Spend your money wisely. When gas or food prices rise, you are less likely to go into debt and more likely to adjust your spending in other areas to compensate if you make it a habit to live within your means every day during the good times. When you can't pay off your debt right away, it creates more debt. If you think gas prices are high, wait until you're paying a 29.99% annual percentage rate on them by using a credit card to fuel up. To take this principle a step further, if you have a spouse and are a 2-income family, see how close you can get to living solely on the income of one spouse. In good times, this strategy will allow you to save enormous amounts of money. How quickly could you pay off a mortgage or retire if you had an extra $40,000 a year to save? In difficult times, if one spouse is laid off, you'll be fine because you'll be used to living on one income. Savings contributions will be temporarily suspended, but your frugal spending habits can continue as usual. Number 3. Invest for the long run. So what if a 15% drop in the market reduces the value of your investments? You will not lose anything if you do not sell. The market is cyclical, and you'll have plenty of opportunities to sell high in the long run. In fact, if you buy when the market is down, you may come to regret it later. That being said, as you approach retirement age, make sure you have enough money in liquid, low-risk investments to retire on time while also giving your stock portfolio time to recover. Remember, you only need a portion of your retirement savings at age 66. When you're 66, it could be a bear market, but by 70, it could be a bull market. Number 2. Diversify your investments. If you don't have all of your money in one place, your paper losses should be reduced, making it easier to ride out market downturns emotionally. You've already got a head start if you own a home and have a savings account. You have some cash as well as some real estate. Build a portfolio of investment pairs that aren't strongly correlated, which means that when one is up, the other is down and vice versa, like stocks and bonds. This also implies that you should think about asset classes and stocks in companies that are unrelated to your primary occupation or source of income. Number 1. Keep your credit score high. When credit markets tighten, only those with excellent credit score will be approved for a mortgage, credit card, or other type of loan. Paying your bills on time, keeping your oldest credit cards open, and keeping your debt-to-available credit ratio low will all help to keep your credit score high. Maintain communication with your creditors during difficult times to keep them happy by making arrangements to keep your accounts in good standing. Many lenders and businesses would prefer to keep you as a customer rather than write off your account as bad debt. While recession is based on a lot of factors, and in the last 70 years since 1950, the global economy has experienced only 4 global recessions in 1975, 1982, 1991, and 2009. It is not wrong to assume that we can see another one happening in the near future. If you follow these 5 tips and are disciplined and patient with yourself and the market, you will survive the recession like a pro. With this note, we have come to the end of this video. Are we going to see an economic recession soon? Do you know any additional tips that can help us to survive it? Let us know your opinion in the comment section below, and we will pin the best comment. Don't forget to click that shiny subscribe button and turn on notifications so that you never miss another finance video from us. We will see you in the next video. Goodbye.